My fellow investors, I'm about to do the unthinkable. I'm selling off the majority of my MSTY. That's right. As you may have heard, Roundhill is releasing their weekly pay MicroStrategy ETF this week, and I'm buying in. I've thought a lot about this decision, and I think I'm making the right decision, and I'm going to go over the reasons why I made this decision and hopefully give you some numbers to think about and things for you to consider if you're wanting to grow your net worth and also have weekly income. So when you look at something like a covered call option strategy such as MSTY, even though you're bullish on strategy and Bitcoin, if you're in a covered call ETF, then you're really slightly bullish to neutral. All right, that is your stance, your outlook on the underlying product. Am I neutral or slightly bullish on strategy and Bitcoin? No, I'm very bullish on it. Right? So MSTW is more of a bullish play while also giving you regular weekly income. That's really at the core of why I made this decision. And I think that over time, as far as long-term investing goes, this fund is going to outperform it in total returns. And I have some really good reasons why I believe that. To briefly go over these Roundhill weeklies and how they work, what they do is they use swap agreements. A lot of retail investors, they hear that and they're like, well, I don't know what a swap agreement is. As far as retail investors are concerned, you don't really need to have a deep understanding of them. Just know that it gives them, the fund managers, the exposure to the underlying asset by swapping with another party. All right. So if you want to learn more about swap agreements, you could kind of do a deep dive. There's some videos out there, Investopedia can help you understand them better. But I don't think it's all that important for retail investors to have a deep understanding of swap agreements. It uses 120% leverage or 1.2 times the underlying on a weekly calendar basis. So this is a more bullish stance than MSTY. What it does is it mimics an options trade or a covered call without the strike price. So you're not capped on the upside. And so that's why I feel like this is more of a bullish play. So if I am in fact bullish on strategy and Bitcoin, this is going to be the ETF for me. It still, gives me that income. I also have MicroStrategy stock, but this is a good complement. And as we'll talk about later, when you compare it to the underlying, in many cases, these Roundhill weeklies are outperforming the underlying, which is unheard of pretty much in the income fund ETF world. One of the things you have to understand about these ETFs, and if you look at several of them, if you look at a chart of HOOW, which is the Robinhood ETF, the NAV has just gone crazy, right? Lots of capital gains. When you have that run up in net asset value, it makes it a lot harder to dollar cost average in. All right, so with these funds, I'm going to have to kind of switch up my strategy with them. What you really want to do with these is build a cash position and then deploy it when you see a market correction or the underlying asset plummets, right? It misses our earnings expectations or something along those lines. Or you could sell off your growth stocks or some other asset and take profits and then redeploy. But you really want to build up this cash position with these because you can't dollar cost average as easily as you would with options funds. So just keep that in mind. So a lot of people may be thinking, well, this this fund is brand new. Why would you be doing this? For one, I can read and understand an ETF prospectus. I also can look how they're comparing against not just the underlying, but the options funds. And I'm going to look at several with you, and we'll get some idea of how they're performing. It hasn't been out very long. Most of these, debuted in February. Let's look at NVIDIA first. We have the underlying stock, NVDA. We have the Roundhill Weekly, NVDW, and we have NVDY. The overall return since February. NVIDIA, 22.18%. NVDY, 13.81%. NVDW, 23.05%. It is outperforming NVIDIA stock. All right, like I said, this is a truly bullish stance that you're taking. And if I'm going to invest in something, I'm going to be bullish in it. I'm not going to be neutral or slightly bullish. Why would I put my money into that investment? It just doesn't make sense. Now, do I expect bear markets? Yes, and that's why I'm okay with owning a little bit of these options funds, because they do outperform in a bear market. But if I'm bullish on my investments, which why wouldn't I be? I would think most investors are bullish on their investments. Well, I'm going to go into these Roundhill Weeklies. I really think that this is the way to have these income funds along with, some growth and maybe a little bit, maybe a small percentage in options. But I'm really getting away, across the board from these options funds because of this, because I'm bullish for the most part on my investments. And I want an ETF that reflects that. And these Roundhill Weeklies reflect that. Let's look at another one. Some of the more popular ones. Palantir, okay? Again, since February. Palantir, 35.15%. PLTY, and Palantir, it has a smaller market cap and higher implied volatility than, let's say, most of these Mag 7 companies. And we've seen these payouts, they're huge. But 18.82%, not great. PLTW, 38.35%. It is outperforming the options fund PLTY. It is outperforming the underlying stock. This is something that you want to be bullish on. And like I said before, aren't you supposed to be bullish on your investments? I know I am. So that's why I'm going with these, the majority of these. I also believe in owning the underlying and a small percentage in the options fund. I am keeping some MSTY because we're going to have bear markets. Let's talk about bear markets for a minute. Now, in looking at 2026, when most people think, there's going to be a Bitcoin bear market, let's say there's three camps, okay? So there's the camp that thinks there's not going to be a bear market. The cycle has completely changed because of the ETFs, the sovereign wealth funds, the countries buying in, increased retail, and all the corporate treasuries, the drill. They think that there's so much money incoming that there's just not going to be a bear market, or not much of one at all right? And then there's the camp that thinks, no, the cycle hasn't changed. The Bitcoin cycle is the Bitcoin cycle, and there's going to be a huge drop, maybe 80%. Okay, that's camp 2. And then there's camp 3, where there may be a small bear market or a shorter bear market than what we saw in the past because of the inflows. We have organizations and like Strategy and people like Michael Saylor who will just buy up more Bitcoin as soon as the price drops. Therefore, that's going to pump the value of Bitcoin up again. plus all these corporate treasuries that are buying in the countries and so on and so on. And so it's just there's gonna be a bear market, but it's going to be a shorter bear market. Now, I'm in camp 3. I think we're going to have a bear market. I want to give a shout out here to Bitcoin University. I was watching a video of his and he gave a really good argument when it comes to the Bitcoin bear market. And he, compared it to the equities market. And he said, well, there's institutions, corporations involved in buying up equities on the stock market, and we still have bear markets. And that's a really good point. Just because we have corporate treasuries buying in, that doesn't mean that we're not going to have bear markets. Long-term holders are going to sell off. It could be that some of these corporate treasuries sell off in the future. We don't know. So, I don't think strategy will, but others may. So, that's kind of why I'm in the camp of, I think there's going to be a short bear market. So do you hold through this? Do you hold your MSTW through this bear market? I think there's some things to consider there. You are leveraged slightly. So, if you wanted to start selling off, well, number one, you're going to be timing the market, and I think it's going to be very difficult to time the market. But what I would say, if I were to do something like this, is once I see that correction happening, I might want to dollar cost average out, just like I dollar cost averaged in, and maybe sell off until I see that bounce and Bitcoin recovery, right? So I would actually be looking, maybe do some TA on Bitcoin itself and, figure out when it bounces and starts to recover, right? But you would want to buy in very quickly. But I think that's risky because no one knows where the bottom is going to be. But if you were to do something like that, that's what I would do. But for sure, I would buy more. Right? You're going to have to look for those big corrections, look for the bottom of that bear market, and try to lump some in, because that's really what you need to do with these Roundhill weekly products. You can't just dollar cost average in every week. I suppose you can. I think it's a bad strategy. So, that's something to consider. So there you have it. I am bullish on Bitcoin. I'm bullish on strategy. And this ETF, it matches, my outlook and my strategy moving forward better than an options fund does. So, that's why I'm switching, and I'm going in hot and heavy this week. I'm going to be buying up probably over 1,000 shares of MSTW.